Euro dollar daily forecast September 20th, fxempire.com. The euro dollar pair had a relatively negative session but bounced off of the 130 level in order to form a hammer like candle right at this significant area. The one thing that this does set up for us is a relatively benign and binary type of trade. If we break the bottom of this, it would become pretty much a hanging man, or at least a busted doji, just kind of depending on where we close, as this is about an hour before the GMT close. But it says the same thing. It says sell, and we think that we run down to the 128 handle or so. If we manage to break to the upside, though, this would show that we would continue higher. We have trouble thinking that 133 is going to be broken, though, as there's far too many issues in Europe to justify much more of this parabolic move. The Europeans are heading into recession, and they have a central bank that's willing to buy anybody's 3-year bonds going forward as long as they ask for help. As soon as they do, there could be a little bit of a knee-jerk rally and relief, that the euro is not going to collapse, but then this has a quantitative easing effect. So right now the pair is obviously focusing on the United States and its quantitative easing, but sooner or later it's going to focus on Europe. So we think that the harder trade's actually to the upside, although it has to be said, it looks like it wants to go higher in the short term at least. So short term bullish more than likely, and we think eventually this will sell back off. Of course, if we break down below, we think a move down to 128 is very likely.